A green chart is shooting straight up. A rocket. Your eyes turn into dollar signs. Your heart pounds. Your hands get sweaty. One thought echoes in your head. This is my chance. I have to get in. You frantically smash the buy button. You go all in right at the very top. And the next second, boom, the rocket explodes. It turns into a blood-red waterfall. And your account turns to dust. Sound familiar? If so, you are not alone. 99% of new traders lose their money here. They lose their dreams and their faith in the market at this one single critical point. Then they blame the market or manipulators. They blame anyone but themselves. In this video, I won't just show you this deadly trap, I will expose its psychology. And I'll give you a simple strategy to escape it. My name is Austin. I've spent 7 years in the market. I have learned to navigate this chaos. Let's begin. So what is this monster that devours new traders? His name is FOMO, fear of missing out. It's that irrational fear whispering in your ear. Look, everyone is making bank on this rocket, and you're just standing on the sidelines. Giving in to this feeling, you make the biggest mistake. You buy at the peak of euphoria. And what happens next? Exactly what you would expect. The market can't go up forever. A correction begins. The price drops and your portfolio turns red. That's when FOMO's twin brother shows up. Panic. The same voice that screamed buy now shrieks sell. It's all over. Save what's left. Driven by pure fear, you sell at the very bottom. You lock in the maximum possible loss. You bought high and you sold low. A classic story. Congratulations. You just sponsored smarter traders. There's a famous chart called the Wall Street cheat sheet. It simply shows crowd emotions at different market stages. At the start of a rally, there's disbelief. Then comes hope. Then optimism, and at the top is euphoria, the point of maximum financial risk. This is where amateurs pile in. After that peak comes anxiety, denial, and panic. Eventually, it leads to despair. At the bottom, when everyone has sold in despair, that is when the smart money enters the market. Your job is to stop being part of that emotional crowd. Let's dig a little deeper. Why do we, as smart people, fall into this simple trap? First, there's social proof. We see everyone in chats and forums talking about a rally. All our friends are making massive gains. Our brain makes a simple conclusion. If everyone's running there, it must be valuable. This is an evolutionary mechanism. It helped our ancestors survive. If everyone runs from a tiger, you run with them. You don't stop to check if it's real. But in the market, this instinct works against you. Second, there is greed. It is one of the most destructive emotions in trading. It shuts down your thinking brain. It hands control over to your primitive lizard brain. You no longer analyze the chart. You don't see the obvious overbought signals. You only see the potential for profit. You see a money train leaving the station without you. Good, a total misunderstanding of the market. A beginner thinks a chart is a straight line from A to B. You buy, you wait, you sell, you get rich. But the market isn't a straight line. It has a pulse. It has a rhythm of growth and correction. No asset can grow forever without taking a break. Trees don't grow to the sky. After a strong wave of buying, profit-taking always follows. Those who bought low start selling to those buying high. In other words, they're selling to you. They take their profit, and you are left holding the bag. Imagine a sprinter. He can run 100 meters at top speed, but then he needs to rest. He can't run a whole marathon that way. An asset with 10 ding candles in a row is that tired sprinter. Buying at that moment is a bet against common sense. Listen, I'm not just a theorist. I've been through everything I'm talking about. In 2019, with just $500 in my pocket, I jumped on the Tesla hype train at its peak. And guess what? Boom, I was down 40% in a couple of days. The market loves to swallow enthusiastic beginners. I spent years learning to read charts. I learned to understand market psychology, and most importantly, how to control my own. I created a system that filters out all emotional noise. Want to see my process in real time? Want to see the exact setups I trade? I run a private Telegram channel for that. I share my market thoughts in specific trades. This isn't a magic get-rich button. It's a chance to learn from real examples. You'll see the logic behind every single entry. For my viewers, I'm offering free access for 7 days, just so you can see the difference for yourself. Plus, you'll get my 7 deadly sins of a newbie checklist. It will save you from making the biggest mistake. The link is in the first comment. It'll be your best trade of the day. Now, let's get to the solution. Enough theory. Here are 3 bulletproof rules. They will work if you have the discipline to follow them. This isn't a holy grail. It's a shield against 99% of emotional decisions. Rule number 1. The 3 candle rule. This is ridiculously simple. Never buy an asset after 3, or at most 4, big green candles in a row on the daily chart. Just forbid yourself from doing it. It's like not crossing the street on a red light. Sure, you might get away with it once, but eventually, you'll get hit by a truck. If you see this pattern, walk away. That train has left without you. Wait for a pullback. Wait for the price to cool off. Entering on a dip, not the peak, separates a pro from a victim. Rule number 2. The stop loss is your best friend. This is the most important rule in risk management. Never open a trade until you know your exit point. A stop loss isn't an admission of defeat. It is the price of your ticket for the ride. It is a pre-calculated and accepted loss. Before you hit buy, you must know the answer. Where will I exit and how much am I risking? If you don't have that answer, do not enter the trade. The pain of a loss comes when it is uncontrolled. A planned loss is just the cost of doing business. Your job is not to avoid losses. That is impossible. Your job is to control them. Rule number 3. The 2% rule. This is another pillar of risk management. Never risk more than 2% of your account on a single trade. Let's say you have a $1,000 account. That means your maximum risk per trade is $20. Not the potential profit, but the actual risk. The distance from your entry to your stop. Why? It is the mathematics of survival. This way you can have 10 losing trades in a row, and you will only lose 20% of your account. It's not pleasant, but it is not fatal. You're still in the game. You can analyze your mistakes and keep trading. But if you risk 20 to 30% on one trade, 1 or 2 mistakes will make you bankrupt. It is almost impossible to recover from a blow like that. Now, let's return to our trader from the beginning. He sees another rocket taking off. But now, he has his shield of 3 rules. He sees 5 green candles. He tells himself, Austin said stay out. I will wait for a pullback. FOMO comes knocking, but he doesn't open the door. The price starts to fall. The crowd panics, but our hero is calm. He waits for his entry zone. The price finds support, and reversal signals appear. He decides to enter. But first, he calculates his risk. My account is $1,000. My stop is here. This means my risk is no more than $20. He enters the trade with a clear plan and a stop. He doesn't refresh the chart every 5 seconds. The decision has already been made. His safety is in his system, not his emotions, and that's it. The same scenario, 2 different outcomes. The first case, a blown account and broken dreams. The second, a professional approach in risk control. Remember, your main enemy is not the market. Your main enemy looks back at you from the mirror. It is your own instincts, your greed, and your fear. But now you have a weapon to fight back. Trading is not a sprint for quick money. It is a marathon of endurance and self-control. What stage are you at right now? Have you already blown your first account on a market peak? Share your story in the comments below. Let's break down the mistakes together. If this video was helpful, you know what to do. Like, subscribe, and hit the notification bell. More content is coming to save you money and stress. And don't forget the Telegram channel, your free 7-day pass to see real trading. Austin out.